Welcome to our show for the trading day of the 9th of April. I'm really excited to be talking with you about what you did yesterday. But first, let's just get into positions. After yesterday is all over the place for me, but where are you at?
It looks like I had my first up day
Really?
in a long time.
Wow.
Yes, I'm at 2.495. Can you hear crazy people shouting at Bowie?
Yeah, it's actually quite loud.
2.495, up $241 from the day before.
Wow,
Trying to make a
congratulations.
couple. Thank you. Zoom finally seems to be on the upswing. That Zoom call really, saved my butt. And I also, funny enough, I started the day thinking about trying to get a space call, but it ended up being so damn expensive. And I was looking at the option chain, and I was like, wait, I keep looking at the calls. Why don't I look at the puts on the right? So I ended up buying another put on space, this time with a strike price of 13, expiry June 19. And space was still up around 6% at the time. But I was like, you know what, hell, if I don't get this, I don't mind. So I just put a low, relatively low limit price. Mm-hmm. So the last price it was transacted at was 225, and I put 1.99, and I managed to get it. So I have a new space put for 13. I also tried to sell the rest of my existing space puts and my SPY puts, but I guess my limit price was too high, and I never hit those. So in the end, I'm still holding on to these puts expiring next week. The main changes are a new space put, and Zoom seems to be recovering. So that helped a lot.
Very nice. Well, I am not doing so well. Actually, I think I made some kind of silly moves yesterday out of
Tell me.
a little bit of desperation. But today I am at 1,496.
I'm sorry, I shouldn't be laughing.
So I am quite heavily down. The one nice thing from yesterday that we had talked about was that I had this call against SPY, and I was like, I don't think I'm going to be able to sell it. I was able to sell it, and actually I did make a bit of money on that.
Well done.
Thank you. So that was really nice. So I bought that call for $96, and I sold it for $225 one day later.
Woo!
So that is really a nice gain. And I'm thinking, is this really interesting for us going forward? And we were talking about straddles, but let's talk about that later. I did a whole bunch of other silly things yesterday. What I ended up doing was looking at my portfolio, and I said, look, I have all of these puts that are so far out the money right now. They're worth nothing, and each one is worth maybe $50 a piece, and I have 10 of those. So I thought, why don't I just hedge that on the other side and buy calls? And so what I did is I sold my Boeing Airlines put, and then bought calls in kind of opposite positions of all of the things that I had, which is Uber, Carnival Cruise Lines, SPY. And so I bought calls in all of these, and that basically stabilized my winnings, losses at that point. And from there, I just ended up being at almost 1,500 the entire day, no matter where the market moved. I'm just in a place where I'm not moving at all, I guess, unless until the puts are worthless or the calls are worthless, I won't make any money. But now I'm hedged on both sides. So at the moment I'm like, okay, I'm gonna hold these positions for now and see where it goes.
I'm sure there's a term for what you're in right now. You know, all these like option traders have these like nicknames for certain moves that you make.
Yeah,
I bet you're in one of them. There's
I
something called an iron condor. Have you heard of that?
I haven't.
It's it's interesting. It's where they have a I don't know how to describe it except that it's your profit is sort of like locked at a certain level as long as the price doesn't move too much.
Right.
This is probably not an iron condor. I'll have to find out exactly what that means. But so you're at least you've cut the bleeding for now.
Yeah, I don't think I will continue to lose money, though then again we have like theta decay and whatnot. And all of these are for the near future and not very far out. So I'm going to have to exit all of these next week. But depending on what the market sentiment is next week, then I will be able to sell the side that's not making any money appropriately and then hopefully get some additional, say, straddles.
Could you tell me a little bit more about your the call that you bought? You said you bought it at 95 and you sold it at 200.
Yeah.
So wait, how does it? I know this is a silly question, but how does it increase so much in value? I mean, it wasn't even like yeah. How does that work?
So this is also what I'm really curious about, because as I think about this, I bought this call yesterday or the day before yesterday for $96, right? And then I sold it for $225, which is 100 and plus percent gain, right? 120%. My thought there is it possible to just buy a put for $96, buy a call for $96, and if the market is volatile enough for you to get just like 120% gain in either the call or the put, and then you sell both at the same time and you end up with a 20% gain? Like, is that the fundamental kind of strategy for the straddle? Do you know?
Yeah, I mean that is. I mean the straddle technically you're supposed to buy a call and a put at the same strike price.
Right. Okay, at the same strike price.
Same strike price, and you want to buy it. What I read was you want to buy it during periods when you think there is going to be increased volatility. Right. So you don't want to buy it during periods when there is high volatility and it goes to low volatility, which is why I didn't look at it yesterday. I think, you know what I mean? But I'm just so surprised that, so just remind me again, you bought the call. Okay, the share price, when you bought the call, you were slightly out of the money, right?
Yes, I don't have the price right now, but I bought it at 11:36 a.m. on the 8th of April. I guess we could go find the actual price for SPY at that time, but I don't know what it was at that time. I don't remember, but it was out of the money, and yesterday it went into the money, just slightly, because it was 277.50. So it was slightly in the money, and then I was able to sell.
Okay, so if your if you hadn't sold the call and you let it sort of expire, had you already crossed your break-even price?
No, but I did later in the day. It got to I think the break-even was 278.25 or something like that, and I did actually cross into that later in the day. I would have then had this SPY stock in my portfolio, right? And then would have been able to sell at that point.
Yeah, it's just really interesting. So it's like you made more money by selling the call several minutes before the actual expiration.
Yeah, literally hours before the expiration, yes.
Wow. I mean, and if there's any experts watching this, please explain it to us. I don't understand how that's possible. It makes me feel like I shouldn't be taking all these way out of the money bets on my options.
During these times of really high volatility, you should be able to buy one day and sell the next day, and there's significant enough price moves that you're hitting 100% profit or loss, right? And because they're so short on time, so they're relatively cheap.
I guess this is just very, very risky stuff that you just did.
Yeah, I think so. Because they expire so quickly, one, they're cheap and the price moves very quickly as well. So it's literally like, okay, you buy it $100, tomorrow it's either worth $200 or zero. There's no
Yeah,
down 10% or anything like that. It's kind
yeah.
of all or nothing, it feels like.
Well, good for you. Congratulations on hitting gold on your first 1 day out call.
So I'm highlighting all the really nice things, but there's so many of my other puts that are just, wasting away basically at this point. I looked at
You
one of
need to
my.
update it in the move sheet. I'm really curious to see your holdings. I have you.
Yes, I will. That was actually something I was thinking of doing this morning. I will update that after this call.
Cool, cool. Yesterday, during this whole quarantine thing, I figured, really like let's try to learn as much as we can about options during this time. So I came across a Medium post that talked about this website called Option Alpha, where they have this like beginner course into options. So I started doing it yesterday, and I don't know. I actually think that maybe you may want to take a look at it as well. It's funny. For me, the way I feel like I learn best is by jumping into the deep end and like getting the practical experience, even if I know very little, and then circling back to the theory, because then the theory becomes more tangible. So that's what I'm doing right now. Hopefully make some better moves, and next week we'll talk about different like strategies. But I thought worth highlighting. I'll send you the screenshot later. I highlighted his 3 principles for success. But his 3 principles for success are basically make lots of small little bets, bet a lot, and I can't remember the third one. And I thought it was really helpful when he was describing like the keys to an option, like the pricing, and how the one biggest advantage that we have as traders is trying to guess what the implied volatility is. He said that many times you can get the direction wrong, the timing wrong, but as long as you get the volatility right, your options can increase.
Mm.
You know what I mean? Because that's a huge component of the price of an option. Well, that was really interesting.
That is really interesting.
So that's what they mean by IV crushed. So like, are we heading into a period of high volatility into low volatility? If that happens next week, then, we're in trouble. And that's why he's saying that a lot of times implied volatility is higher than actual volatility. So in the long run, the people that really make money playing with options are the people who are selling, not the buyers.
Right, and they're slow and steady, just collecting the fees.
Yeah, I thought that was interesting. Obviously, I want to keep buying the options right now. But I thought those were interesting key points that I learned yesterday.
Yeah, that's really interesting.
Anyway, regarding moves next week. So I know we're supposed to limit most of our research to Reddit, but I was on YouTube and like there was a video that was recommended featuring this hedge fund manager. I think his name is Daniel Niles or something. And he was explaining his bearish outlook, and it's simply that stock prices are extremely expensive right now, still. And they took a dip, and then with the whole stimulus and everything, they've risen, skyrocketed, and they become really expensive. And we have a lot of earnings reports coming out this coming week. So he thinks that there's a good case for prices to come down, just because the share prices are so inflated right now with a steady stream of bad news.
That's really interesting, because what we're seeing is everybody thinks that there will be bad news, and what will actually happen to these companies, my kind of just gut feeling is everybody already feels the bad news. They're getting the every day companies are shutting down, laying off workers, etc., and the stock price is going up. And I don't think that more bad news will make a difference in the stock price, because it's not about value right now, or it doesn't feel like it's about value. It really just feels like who is buying these stocks, I don't even know. Like, and what is keeping the market or the stock market so high in price and keeping these companies overvalued? And I think just a lot of this stimulus money is going directly into the market to prop up these companies, which effectively is true. They're getting checks and whatnot and getting bailouts. And so the market isn't really going to care about earnings. It's more about how much cash did you get from the government right now. And I don't think that's going to return for another couple months.
You don't think that's going to return for the next couple months?
I don't think for a couple months at least, people will think, let's look at whether this company is value for money. Right now, they just think, well, what is the stock price, and is this company going to be able to survive and get money from the government and get bailed out? And if yes, well, keep the stock price high.
Yeah, if this helps you sleep at night, owning all these calls, I think you should continue to think that.
Thank you. Well, I have puts and I have calls, and I'm not making any money right now. So I'm definitely the one losing out of this bargain. As well, I definitely didn't sleep well last night after making these purchases.
Oh no! What time did you go to sleep?
Oh, like 4 a.m. I could not sleep.
Oh man!
Like I just kept thinking about these moves I was making. I kept checking my phone, looking at the prices, where they were going. Yeah, it was super unpleasant. I had a horrible night's sleep.
I know, it's awful. I think that so I managed to limit all my moves till about our time, like 10:15.
Yeah.
So 45 minutes I made all the moves. But I do remember there was a solid 2 minutes there when I had because Interactive Brokers takes a while to update their information. So I was in Google typing in space share price, staring at the digits. Are they going up or down? Trying to help me make a decision. Oh man, when you're looking at these numbers, it's not a good state of mind to be in, I think. So I hope you sleep better tonight. There's a 3-day break, and Monday will be very interesting.
Yeah, Monday I think will be very interesting. When do the earnings calls start to happen? Is it around the 15th of April?
Very soon, yeah.
Interesting.
I know Space in May, for example.
Got it. Or this is the quarter one earnings for most of the companies, is that right?
Q1 earnings.
Got it.
Yeah.
That makes sense. As well, though, I don't think Q1 earnings are going to be bad for most companies.
Yes, this only really started. It only really started going crazy in March, right?
Yes.
Right. Not bad.
And not even early March. Mid-March is when things started to go crazy and things started to lock down. So we had 2.5 months or so of everything's fine. So I'm very
trust me, I really wanted to buy calls yesterday. I was looking at buying calls, but it just felt kind of expensive. So.
Oh yeah, it feels really expensive to me too. But I still bought them.
Good. Probably made the right move. I guess we'll see next week.
We will see next week. I'm looking forward to sleeping better over the weekend when I don't have to worry about these positions.
Cool.
Well, what are you going to do on Monday? Do you have a strategy in place at this point?
Well, I mean, my Zoom calls, which, I've put the most of my money into, it expires in August. I have no plans on looking. I'll leave it there. Hopefully, it sounds to me like the CEO is one of those guys who admits his mistakes. He seems to be devoting resources to fixing them. So I'm hopeful still that call will continue to rise. But I know there's going to be lots of intermittent falls and things like that. I think the rest of my money is parked in actually all in puts. So I still have to maintain quite a bearish outlook the next week. I would like to exit space, the put that I just bought, relatively quickly. Hopefully there's 1 or 2 days when it doesn't look so good, and I can exit that. And I'm excited for a window to jump into calls. I just think last night wasn't it for me. Yeah.
That makes sense. Next week, I am going to sell almost all of the short-term positions. So I don't have very many positions that are in May. I think there's only 2 SPY puts that I have. Everything else ends the 17th of April or the 20th of April. So next week will be just a very busy week for me to sell everything when I think it is in a profitable, not even profitable, when I think it is in a reasonable state for me to sell. And hopefully I can end up from where I am now and then start to make better decisions and better strategy. So I think this weekend I'm going to try to learn as much as I can about option trading and some of the strategies and just make more informed decisions, because so far 85% of my portfolio value is gone, and I would like to learn how to not have 85% of my value go away in 2 weeks.
But I still think that for the good of this new venture of ours, you should try to bring it down to 90%, just so that we can come up with a good variability.
You're right. Is 85% just doesn't feel as good? Is that right? Right.
90 sounds a lot better.
What about like 97%?
I don't need 97. 90 is fine.
90. Okay. Well, I'll do my best, and we'll see what happens next week.
Thank you. Thanks. Thank you. Thank you. Thank you. Thank you.
Okay, let's wrap
All right.
up. Okay, guys, that is our show. Thank you so much for watching us kind of talk about where we're at, the moves we're making, and what we're going to do next.
Yeah, and if you want to see, how our moves pan out next week, please like, follow, and subscribe to us for more updates.
And don't forget to comment on the things that we're doing and what you think we should be doing. Also, if you have some experience option trading and can tell us some wisdom, that would be really great. We would love to learn.
Yeah, we're a little short on wisdom.
It's very true. This is obvious based upon the amount of money that we have in our portfolio, so could really use your help.
Yes, please.
I'm Zenos Jake.
I'm Ming.
See you next week.
Bye.